They thought I would fold, but I'm never folding. Please don't call my phone, don't you ever think of calling. Catching these pips like daily, making money easy. Catching these pips like daily.
What's up YouTube, it's your boy Weisenheimer and I'm back with another video. Today I decided that I'm gonna be sharing a volatility 75 index strategy that will make you a profitable and consistent trader, right? So I had a couple of people on my WhatsApp saying that I must drop something about volatility 75, and some of the people I saw them on the comment section saying that I must look into volatility 75. So obviously I managed to come up with a strategy that will only that you'll only implement on volatility 75, and obviously I assure that you will see the results, right? So if you are new to the channel, thank you for checking us out. Make sure that you do subscribe, like, and also share with your other friends, right? If you're new to the channel, welcome back to the channel. Make sure that you give it a thumbs up, and obviously turn on the notifications bell so that you get notified when I drop another video, right? So without wasting time, I'm just gonna read the verse of the day. You know how we do it. So it's First Chronicles 16 verse 8, and it says, "Give thanks to the Lord, call on his name, make known among the nations what he has done," right? So basically, if you need to obviously understand the whole scenario, just go read the whole chapter, and obviously just get to understand what is it that this verse was actually talking about, right? So even with the video, if you need to understand everything with the strategy, you have to make sure that you don't skip any part of this video, so that you don't lose any other information that will be shared and they'll just skip the video, right? So we're going to be focusing on volatility 75, as I said earlier. So now we only have 3 time frames that we're going to be looking at. We're going to be looking at the 1 hour time frame. We're going to be looking at the 30 minutes time frame, which is the mother time frame. Then we're going to be looking at the 5-minute time frame. We're going to be using the 5-minute time frames to execute our trades, right? That's where we'll get entry point confirmations, and that's where we'll enter and obviously get to see the nearest stop loss and the nearest take profit that we can use on our VIX 75. So that's just how it is, guys. Let's just get to the chart. What's up, guys? So right now we are on the volatility 75 index chart. The time frame is 1 hour, or H1. So basically, like I said, we're going to be focusing only on 3 time frames, which is the H1, the structure time frame. Then we have M30, the mother time frame. Then we have M5. On our M5, that's where we would be doing what? We'd be executing our trades. So basically what you have to understand with volatility 75 index or VIX 75 index, what I've discovered is that there's consolidation, then there's extension. And another thing that you have to understand with VIX 75 is that it doesn't respect chart patterns as it should. However, it can be a continuation pattern, and at the end of the day, the market is reversing. You understand? So those are the things that you have to look on, or to look at on volatility 75. However, I'm going to try by all means necessary, or by all means possible, to do what? To simplify this thing. So on H1, we don't look at much. We just look at the structure, obviously the overall structure of the market. Where is the market going at that particular given time? Obviously, you can see it's a downtrending market, and it's obviously it's giving us beautiful. It has just gave us a beautiful extension right here. So an extension, I'm talking about those impulsive moves. You understand? So what you're gonna do, you're gonna be using your horizontal lines. On your horizontal, when you draw your horizontal line, you draw the horizontal line on your body and on your wick. So basically we started with this one here. You draw your horizontal lines on your body and your wick, right? So this is another one here at the top, the body and the wick. So you include both. let's go to the lowest point available, or the lowest point visible, or the market's lowest turning point, right? We have the body and the wick. So that's what I'm actually gonna do on my 1 hour time frame. I'm just gonna be focusing on the market's high and the market's low. So basically after this one, I just leave it like that. So since it's the H1, you can just come here and obviously fill this thing. When you fill it, you can maybe change that to a bit of a good color like this. So after it's filled, I'm just gonna put it inside here, and I'm coming here again, putting this inside. So what do I mean about having these two levels on the body and on the wick? It's simply because the first entry, right, hear me out correctly, the first entry must be on the what? On the body. Then if it happens that the market is pushing to the downside, you're just gonna obviously wait to further scale in and put or buy again on the what? On the wick. Why are we doing this? It's simply because volatility 75 index, most of the time it doesn't respect price. Volatility 75, most of the time, it doesn't respect chart patterns. Volatility 75, most of the time, it doesn't respect trend lines or whatsoever. But with the levels, you are free to go. Right? So it can just come here on the body and just make a sharp U-turn all the way to the upside, while another person is just waiting for volatility 75 to give us a beautiful double bottom here, and only to find out that it'll never happen. You understand? So that's why I'm saying that you must, when you put your horizontal lines, obviously it must be between it must include the body, and obviously at the same time include the wick. So we are done with H1. H1 is just for structure, looking at where the market is currently going or headed to. Then as you can see that the market is headed to the lower part of the markets, and obviously we have our first entry here, and obviously we have our second entry down there. So it's just that. However, I'm now gonna switch to the mother time frame, which is obviously my M30. So on my M30, that's where I can just come here and obviously get to apply my trend lines. If you feel like you see a chart patterns or a channel, you just highlight it, or you just throw it, just something like this. So you know that a lot of people would be buying at support, selling at resistant, buying at support, and selling at resistant. But then with this strategy, we don't do that. Like I said, we only cater or we are only in for the what? For the extension. Only the extension. So how can you see the extension? Obviously, you the first thing is that you draw these trend lines obviously on your M30, then you switch to your M5. So on your M5, that's where you'll do what? You will obviously catch the extension, because that's where the market will give you a clear, visible breakout of structure, then obviously a respect of structure. Then then from here you just consider the candlesticks rules. The first candlestick closed outside, the second candlestick closed outside, and when the third candlestick formed, that's where you do what? You take your sell, and that's where you'll be having a fully confirmed trade. So you're gonna be trading this thing risk. Let me say that you have 90 to 99% of obviously winning this trading. You have the only chance of losing is just like 1%. So that's just the interesting part of it. So you are able to catch these beautiful impulses here. Beautiful impulse. So now we're gonna go and check for another example on my M30, right? I just wanna show you guys how simple this thing is. M30 is the mother time frame. Basically, that's where you draw your trend lines as the market is still correcting or whatsoever that it's doing. You relax. Then after that, you do what? You switch to a bit of a lower time frame. Obviously, your M5. So let me see, where's this setup? It's right here. All right. Beautiful, beautiful. Market broke here, And obviously we were waiting for the what, for a beautiful retest. Markets came here to give us a beautiful retest, and obviously after the retest, the first candlestick to retest closed outside of our what, of our trend line. The second candlestick also closed outside, and when the third candlestick formed, that's where we do what, we execute our trade confidently on the VIX 75. And obviously that's how you do what, you catch the what, the impulse, or that's where you catch the what, the extension. I love calling it the extension. That's how you do what, you definitely catch the extension. Remember, the risk reward ratio is very beautiful. You have 90 to 99% of winning this trade, and you only have 1% of losing this trade. So to me, it's a beautiful strategy, a very, very beautiful strategy that you can use as your daily strategy. All right, have another one here. Beautiful market correction, or beautiful market correcting, and obviously you switch to your M5. This thing is taking me back. Let me zoom out a bit. Must be this one. Obviously the market broke here. When the markets broke here, it never gave us a retest. So you have to remember that we have two types of retest. We have an immediate retest, and we have two types of breakouts. I'm sorry. You have an immediate breakout, and you have a breakout that will come to do what, to retest the market. So obviously the most safest breakout is the breakout with the retest. However, you can also trade an immediate breakout, but to me it seems like it's kind of risky, because you don't know if the market is gonna, if this is the right immediate breakout, or the market will retest. So you don't know that. So I feel like the right setup to trade when it comes to the breakouts is the one that comes with the what, with a retest. So you can take your chances on this one. However, if you do that, make it sure that you count the candlestick. First candlestick closed outside, second closed outside, and on the third, when the third formed, you enter, and obviously put your stop loss above the second candlestick, where the second candlestick started, above, just right here, so that you only risk only a few bucks. So another practical example, we can get it right here. Guys, this thing is so simple. Once you just master this thing, then you are gone. Once you master this thing, then you are gone. I'm telling you, I won't lie to you. This thing is very, very, very simple. Pretty much simple, right? So it's just that you just be doing the same thing over and over again. So we came here, the markets obviously gave us a beautiful breakout here. Market broke out of structure, gave us I wouldn't even consider this one as a retest, because it's not quite clear. But however, you can just take it as an immediate breakout. First candlestick to break out, closed outside, the second one closed outside, and obviously when the third formed, that's why you'd have just take your seller, and obviously that's why you'd have just caught the beautiful impulse here, or the beautiful extension here. And obviously you put your stop loss above the second candlestick, just right here, so that you don't risk with your capital, and obviously you catch a beautiful extension all the way to the downside. So remember, the mother time frame is our M30. That's where you obviously get to look at the what, or that's where you get to draw your trend line. Then you only use your M5 for entries. So I'm gonna further back test. We have let me delete all of this, because we tested the other ones before. So we have another one here, spotted right here. Right here, right? Something like this. Here. So the markets gave us something like this. What is it that we do? We don't buy at our resistance. We don't sell at our resistance. We don't buy at our support. But obviously, we wait for a beautiful impulse, or wait for a beautiful extension on our lower time frame, which is what our M5. So the market gave us a beautiful uh, breakout. Then obviously what we waited for was the retest. So first candlestick tight here and closed below. Second candlestick closed below. Then when the third candlestick formed, you obviously do what? You obviously take your seller and obviously catch this beautiful extension. And where do you put your stop loss? Above the what? Above the first candlestick. Just put it here so that you protect your capital as much as you can. So let's look for another one. But this thing, guys, is the same thing over and over again. Just as long as you can be able to do it, to spot this market when the market is pulling back. If you can be able to spot when the market is pulling back, then obviously you can be able to do it, to catch that beautiful impulse, or to catch that beautiful market's extension as the market is going all the way to the downside. So the disadvantage of using a phone is this one. So obviously market broke out of structure here, gave us a beautiful breakout. Markets came back to respect the previously broken structure, and obviously first candlestick closed below, second candlestick closed below. When the third candlestick formed, obviously that's where we obviously hit our jackpot and take that position all the way to the downside, right? Let's look for another one. Here it is. Let me switch to M5. So unfortunately we cannot further backtest, because if you can look here, it says maximum bars limit. But however, I think that the information that I've given out already is gonna be helpful to a lot of traders out there. So let me know what you think in the comment section about this strategy. Go and test it, and obviously come and share the results with the team. And obviously let me know what you think about this session. If it was helpful, make it sure that you like the video and you comment. So that's just how it is for today, guys. Thank you so much. Peace out. Thank you for
I
watching.
would fall, but I'm never folding. Please don't call my phone. Don't you ever think of calling. Catching these pips like daily, making money